But the question for you is, since you're the head of fixed income at Rathbone, what action are you taking on the back of the Dermond Strang, if you like, of what's going on with these polls at the moment?
Yeah, well, I mean, obviously there's been a huge rally in the gilt market over the last 3 or 4 weeks, taking gilts to new lows. And I personally think that's probably gone a little bit too far. So one of the things that we've done as a house and as in portfolios is actually to reduce the duration in our gilt portfolios. The amount of where yields have got to last week, and I think after yesterday's dress rehearsal of a potential Brin or Remain or whatever you want to call it, there was a sell-off in the gilt market as well. So kind of positioned ourselves a little bit early for that potential rise in yields. I mean, if we stay in Europe, I think we'll see a significant rise in gilt yields. I mean, you could see a 25 basis points and above move up in yields. If we do leave Europe, okay, you might get a initial rally, but there is a question over the UK's credit rating if we leave. There's a question over a lot of things if we leave Europe, and to the sort of short to medium terms, you might actually see yields rise in the UK.
I mentioned earlier it's become very binary on the market. Everyone seems to care about it. They do this on events, whether it's Brexit or whatever it may well be. And now Brexit is the key thing. So looking away from UK assets, are there other assets that have moved in line with this story that actually, on their own fundamentals, look out of kilter at the moment, in your arena especially?
Yeah, well, I think one of the things that we've seen is actually the fact that it's to do with spread really more than anything, is that if you look at emerging market spreads, for example, they haven't come racing in, but you've had quite a significant fall in government bond yields. So the extra carry you can get from some of these higher beta assets now really protect you from potential rises in the underlying yield. So, for example, if gilt yields did back up 50 basis points or US Treasuries backed up 50 basis points, in the bond market where you were getting 0% for the 10-year, any backup would be slightly negative. So you're kind of being protected from some carry. So despite the potential risk of global growth slowing, perhaps some of the risks associated with Brexit, you can actually buy in some risk assets now at the moment, can actually look quite attractive because of the amount of carry that you get from them.
Oh,
kind of
come on. Do you know what? You sound so 2006. You sound... 10 years ago, we had everyone telling us that Jamaican bonds were fantastic and this, that and the other. Look at that 5% yield, it's mouth-watering. Do you really believe, honestly, given everything that's happened over the last 10 years, that owning that stuff is worth kind of having a 5% yield, a 4.5% yield?
Well, I haven't said... You said that, yeah. So if you don't think they're going to be defaults, yes, because you can ride out. If you're a long-term investor and you can take a 5% return for 5 years, it's going to give you close to 30%. Now it might be a rocky ride. I agree. You might have periods where those assets are going to underperform, and then if you haven't got the bottle to stick in them, you're going to take a loss. Okay. But some of those assets through 2006 and 2007 went down a lot, but also continued to pay your coupon, and have actually over that period have returned you good returns. So it really depends what kind of volatility.
Who can hold? You say the bottle to stay, but who can hold to duration in those circumstances? Don't forget the old adage: you sell what you can, not what you have to. Or what you can, not what you have to. Get rid of anything that has potentially got a bid on it.
It depends on your liquidity requirement and whether you need. If you've got a short-term investment horizon and it's 1 or 2 years, then you don't want to be holding those assets. If you've got a 10-year investment horizon, I would say to anybody you can take those assets.